this video, we're going to talk about the two entry types on a live chart example. So as you can see, we have the red painted in the bearish trend and the blue painted in the bullish trend. Okay, so we're going to start with the bears right now. As you can see over here, from the very high, we have an area where price broke structure right over here. All right, and when price broke structure, it didn't come up right away to mitigate this area. Instead, it came back later and tapped this area of interest. Okay, point of interest, the supply. Once the supply area has been tapped, all right, there's two scenarios that could happen. We have the scenario where we could look for the risk entry, or just enter immediately with a huge stop loss, right, and look to potentially target these lows. Or we have the confirmation entry where we could wait for an area to break the last previous higher low, like so. As you can see over here with this wick break, price then retraces, coming back to an area of supply, and then price taking off, right? It comes back to an order block right over here, and then price took off. So those are the two differences between the two. You can obviously see taking a risk entry like this maximizes your risk by a lot, right? And if the trade should ever go against you, you would lose a lot more than you would a confirmation entry. Okay, when you do a confirmation entry, essentially you're waiting for the market to change direction, and then you're looking to target a little bit, you're looking to expose a little bit of your risk as opposed to the risk entry, right? So in order to understand the risk entry, the confirmation entry, you need to wait for the minor structure to go bearish. We need the substructure to come in and break the minor structure, which happened over here. So this would be deemed a beautiful, confirmation entry. And that's how we would do both, right? So as you can see, again, we have the same scenario here. Prices go low, break the low of the structure, prices retrace, and as you can see very closely here, you could obviously have a big risk open like this. This would be a risk entry. Okay, notice how price, the minor structure is going bullish, and then as a risk entry, you could just look to target, look to sell off like this, right? Or you can just wait for your confirmation entry to begin, which would be the higher low broken like this. Once it's broken, this gives us a validation and a confirmation that prices should indeed go lower, because the change of the direction is bearish now, and market wants to go low, right? That is how we handle both. You can obviously see that the confirmation entry would have a lower risk as opposed to the risk entry with a bigger risk exposed into the market. Now both aren't, they're both right. Just one of them has, which would be the risk entry, would have more exposure in the market in terms of risk, and you would either lose a lot, right? That would be bad. Either that, or as opposed to the confirmation entry, you would lose a little if you entered that market. Say, once the price broke this structure like this, once price gave us a confirmation break of structure, then we'd look to enter, and then we only have a little bit of risk, a little bit to lose. All right, once we have another break of structure, very easy to simplify this and to understand that you could look to enter this area, right, with a huge risk like this. This would be our risk entry. Very aggressive. This would also be considered an aggressive entry as well, because there's no confirmation that says price is going low from here. Okay. You can also wait for the confirmation entry once price breaks structure. Break structure over here. You can see clearly. Okay, we have the high broken first, and then the low broken second. and then it changed direction, going south like this, right? You could also probably go on the lower time frames, probably 1 minute or 3 minute or what have you, and maybe see a potential reversal in here to look for an entry. We aren't able to go lower than 1 hour because we are all the way back in the history of this GBP CAD currency pair. So, yeah. Once the direction has changed, one thing I do want to mention though is that price is fractal. So if you aren't able to catch the sell-off here, okay, you can just wait for price to change direction on your higher time frame, like so. Price broke above, price broke below here, and now price waits to come back and retrace. And then you could have looked for the sell-off here. Obviously, you wouldn't want to sell off immediately because your risk entry becomes so huge, right? Your risk becomes big. So you would need to wait for price to exchange in reverse from bullish to bearish. You can see price is bullish here. All right, and then we had an area where price broke this last low, and then here's our order block, an area where price could an order block here where price could be a better for an entry, right? Something like this. Your risk becomes a lot more smaller, like this. Okay, and then prices then extend, as so. Again, it's not bad to take risk entries, although you are exposing yourself to too much risk. That's it. If you know where the exact order block is and where the exact area where price is going to stop and then reverse, then by all means go ahead and take it. But for those of you that don't know where the order block is and where the market's going to stop, then I would advise you not to, because it is very it's much more safer, right, to take a confirmation entry. Once we have price break structure like this, all right, we'll wait for price to retrace. Notice what's happening here. If you had a risk entry like this, you would lose a lot of money here, right? Price doesn't go in our intended direction, so we would lose a lot, as opposed to the confirmation entry. We may lose some or may not lose anything, because on the lower time frame we're waiting for price to reverse, right? Notice there's a low and a high. Price never broke that low. Price never came back up. So why on earth should we be looking to sell this if price just breaks above this previous high here? Okay, it makes no sense until price actually breaks this low and gives us that confirmation that price is reversing bearish. But in this case, it hasn't. So we would waive this market and look onto different possible entries. All right, as you can see here, we had price break and structure. Price hasn't come to retrace here at this area of demand, which is totally fine. If prices break and mitigate and don't mitigate. Okay, let me repeat that again. If prices break and do not mitigate, don't wait and be stuck on just this part of demand, right? You need to adapt to the market's behavior. So in this case, price broke a new high again like this, and then we realize where the last high and the last low is, and then we'd wait for prices to come and retrace back to this area if prices ever do come, right? So in this case, price have never come, right? You can see price was consolidating again, and then prices broke structure. You can see that structure was broken here, this last high, and then you can look all the way down here. You can see where price was bearish, okay, and prices just started shooting up. You can see the change that's happened here, the change of direction. Price did come back and tapped this area of demand, and then pushed prices higher. So this would have been a good confirmation entry, as opposed to a aggressive buy that a risk entry, potentially buying maybe from here, which I don't see why people would ever want to buy here. But you're exposing yourself to so much risk because there's no knowing whether the markets are going to go against you or not, right? That's part of trading. Okay, once price has broken a new high, we obviously see here that price hasn't mitigated this order block. as a risk entry trader, you might just be automatically looking to buy here, looking to take a buy up there, right? But notice how prices go up your way, but then prices come back down, right? I mean, you're left in a huge gobble of mess. I mean, look at this entry, look at this risk. It's astronomically huge, right? But as far as a confirmation entry, we could wait for prices to tap this demand area, and then we could look to profit on the trade once prices change direction. You can see we had a low, and then we had another high here, and then price broke the high, never came back to this area of demand, and then now we would wait patiently if prices ever do come here, right, to this demand area. Sometimes markets don't come there just because the markets have a plan for it, for the markets to come there eventually. The beauty of understanding risk entry and confirmation entry is that you don't rush into trades. We're never going to be rushing to trades, right? Being patient is probably the most valuable commodity that there is for a trader. Okay, being patient. You can't just be chasing the market, because that's what the market wants you to do, right? Is to chase it. If it doesn't work out, right, then just keep moving on. Keep adapting to the market. Do not feel angry or mad, because this is in part, that's what the market wants you to do, is to make you feel mad and upset that you aren't catching these trades, right? Because you're waiting. I've understood that as a patient trader, that's you're the most powerful when you're being a patient trader. All right. So let's adapt to this. Okay. So price broke structure never came in mitigated, right? Although price broke new highs here from this area where price was consolidating, price came back, and then you could have entered this area as well right here. Although again, this isn't a confirmation entry for us just yet. We would need to scale down on a 30-minute or all the way down to 1 minute to look for potential entries. You can see it here, actually, right here. We had the low broken, and then we had the high broken right there. If we extend this, you can capitalize on this move right here. All right, we had the low first broken, and the second broken, the high was broken second. Wait for price to come in there, and now this would be a confirmation entry because price had the high broken. We wait for price to exchange from bearish to bullish. The bulls have showed interest in going up in the higher direction, right? On the upside, and then there we go. The buy would have happened just amazingly, as opposed to the risk entry where you could have potentially risked here. And there's no knowing obviously where price is going to go from here, but you're still leaving yourself with a great amount of risk. Just don't know what will happen in the markets. Once price has broken out of this area, right, the price needs to retrace. Now we look for price to tap here, right, and then for the risk entry people, traders, you can look to take a trade like this, right, and then wait for prices to go up, and then eventually you get knocked out, if you're this type of trader, right? Because not every break of structure is going to be guaranteeing this entry to go up, right? I mean, there's a reason as to why the markets do this, which we'll talk about in another video, and how you can spot the reversals before they start reversing like this, okay? So this would have been bad for the risk entry type of traders, but it would have been good for the confirmation entry type of traders. Once you see prices pushing bearish, right, you can see that price is changing direction from here. There's a low that was broken. There's a low that was broken. There's a high that's being respected. Price is going all the way up here. You can see price is retracing all the way from up here, right, and then respecting these highs here. And then price goes bearish part of the way, and then goes bullish again from here, okay? As a risk entry, you might have been able to capitalize on this, obviously. Exposing yourself to too much risk from this high here, and then looking to profit somewhere down here on the lows, right? But as a confirmation entry, we would need to wait for price to exchange a break direction. Here's that low that we see. Here's that high. You can again see prices break structure here, and then you could have capitalized on some of the move from this area down here and ended your trade down here, right? Not every entries are not every entry is going to work for you. Not every, because we can't tell the market to do certain things that we want to do, obviously, right? We need to be patient traders and always wait for those confirmations to happen. Otherwise, we would be dead in the markets. All right, I want to show you the major structure, what's happening here. This is major structure going up, and then we saw that substructure pushing down, and then minor structure is changing direction from here. Notice how we had an area right here where we had a break of structure low and a break of structure above. Prices never came down to this area, never tested this area, right? So in the long run, if we zoom out, this is an area where price would be interested to come in eventually, right? Because you can see if you zoom out here, you can see that price eventually is going to come here, tap this order block, and then we're going to look for the price to change direction, for prices to move even higher, like so, right? If this ever works, like this, right? There we go. So that's what we would look over here. We'd look for a confirmation as opposed to an area where exposing ourselves to too much risk, like this, right? Or maybe even like this, targeting this low, or what have you. Okay, we would wait for the markets to come here and then look for that reversal and then minimize our risk to a small risk rather than a big risk, like this. All right, let's look over here to the left side kind of quickly. You can see once we had price break structure, this area right here, let's zoom in here, we had two areas to look for potential buys, right? As an area, as a risk entry, you can see the price, you'd be risking yourself in too much risk, right? And then again, it's not wrong, but at the same time, you are risking yourself to lose a bunch of money in this area, because it could have been maybe, this area, this demand zone, or this demand zone where price would come to. As far as the confirmation entry, we would need for prices to change direction. Notice what's happening here. We had a high and a low, okay, another high and a low right here, and right there, okay? Price broke that structure. This would be seen as a low. This would be seen as a high right here, and there's another low right there, okay? So we would want prices to change direction. And notice when price breaks structure, all right, look at that. Very easy to understand. There's that high that was broken, and here's that low, right? Notice when prices pull back, it comes back into an order block right in here, okay? And then an area of demand, and then that's when you could have looked to confirm this entry, and then look to buy from here, risking just a little bit, right? And prices would have gone your way, as opposed to risking so much, like that, right? That's a beautiful move, right? Like that. Okay, so one more last example, right over here to the left of us. Let's go over here. You can see over here we had this area, not right here actually, right here. You can see that we had a high broken, right? There's a low, major high was broken, prices need to retrace. You can look for, these are two areas that price look very nicely for price to come back down to on a demand level, right? Once prices get here again, you can just do a nice, risk entry like so, right? If you were really on point and you understood where buying and selling was happening, right? Or we can wait as patient traders, and as a confirmation entry. You can see the low is broken first, right down here. You can see the high was broken second. Come on, here we go. Right there. We wait patiently for the markets to come back down to an order block, and then we would look to strike here. And then you would notice our risk become very minuscule, very small. Okay? And then look to profit onto this. Okay? Something like that. As opposed to having a bigger risk down here, where you're left to die because prices are going bearish. We need prices to change direction to push high. All right, and that's what the two differences between the two entries are, guys. So go ahead and map that out in your markets, and then go and see how you know, and test this, back test this. Obviously, I encourage everyone to back test everything that we're teaching here, because you know, without back testing, you know, you won't be able to be able to exercise your skills and knowledge on knowing what works and what doesn't. So definitely go back and test those. As far as this video, guys, we'll close it now, and then we're going to go into the next. Okay.